everyone. I'm Richard Palmer, a partner with Watemans. I'm delighted today to be joined by my colleague Anne-Marie Knight for this podcast in a series by Watemans looking at the challenges posed by COVID-19 to the insurance industry. In this podcast, we're going to consider the blame game that is currently taking place in the insurance industry and beyond. We're not seeking to provide answers. Each individual case affected by this pandemic will be fact-specific. Instead, we'd like to highlight some of the issues that we're seeing, both in the press and in the insurance sector where we do a lot of our work, the effect that this is having on the insurance industry, and the loss of public confidence in the concept of insurance and the market that provides it, which could take some time to recover. Of course, the blame game is not restricted to the insurance industry. The government is facing questioning and criticism as to whether it acted quickly and strongly enough in relation to issues such as testing and its lockdown restrictions. Wealthy individuals in the public eye have also been judged as to whether they were right to furlough staff, for example, rather than meet that expense themselves. It's the insurance sector that we're going to concentrate on today, however. Anne-Marie, perhaps you could set the scene as to what we're seeing there?
Thanks, Richard. Well, as we know, the COVID-19 pandemic has already had a huge effect on the economy and its future prospects. This has created perhaps unprecedented levels of stress and anxiety for all sectors of the economy and for most of us on a personal basis. Very few of us could possibly have imagined when COVID-19 first emerged in China in December that the virus would have such a shocking effect on this country and the wider world. Quite apart from the dreadful number of deaths that have occurred in recent weeks due to COVID-19, the effects on the economy are immense. Figures vary, but it's been estimated that 70% of private firms have now furloughed staff under the government's job retention scheme, and the cost to the Treasury is currently estimated to be £40 billion until the end of June 2020, just on the funding of this scheme alone. A CBI survey published in April suggested that retailers have suffered their biggest ever fall in sales after being forced to shut their doors because of COVID-19. 71% of retailers saw a drop in sales compared to a year ago, and that is said to match the decline which took place after the 2008 crash. It's also been estimated that 44% of companies are temporarily laying staff off, and about 10% are making permanent job cuts. 96% of companies interviewed reported cash flow difficulties. Of course, the Chancellor has now warned that Britain's facing a very significant recession. The collapse in consumer spending is hardly surprising, really. Under the lockdown scheme, we can't actually visit many shops and businesses, such as restaurants, cafes and the like, because they're simply not open. Consumers are also reining in their spending given the increased job uncertainty that's followed from the pandemic and its effects on businesses. The Office for Budget Responsibility has estimated that the bill facing the government for subsidies and tax breaks has already reached more than £100 billion. Other research has estimated that Britain's economy is likely to lose £800 billion of income over the next 10 years, and that's a very scary figure. Most importantly, the number of diagnosed COVID cases in the UK currently stands at 233,000, and the number of deaths is said to be 33,000 people and rising. The government's 50-page roadmap out of lockdown sets out a three-phase strategy for gradually lifting restrictions, but that's all conditional on the infection and death rate being kept low. There's also been a lot of criticism about the vagueness of those guidelines, and there's no real certainty for many parts of the economy about when normality will be resumed. Of course, the government can't offer any guarantees. It's hardly surprising that there's huge anxiety within the business community about their ability to survive the economic impact of the pandemic. I think while initially it was the case that most of us simply followed the government's mandated requirements in terms of home working, business closures and the number of times we should all leave our houses, it's certainly true to say that what might be called the blame game has begun. For example, it's been in the news for weeks that some have been questioning the steps taken by the government in terms of issues such as whether they brought in the lockdown quickly enough and whether they were properly prepared for a pandemic at this level in terms of PPE and intensive care beds. But insurers have been very much in the spotlight in the media as well around the issue of policy response to pandemic-related claims and their perceived contribution to spreading the burden of the financial consequences of COVID-19 as between insurers, the government and the wider business community.
Thanks, Anne-Marie. I mean, it's very obvious from what you've said, and I think from what we've seen ourselves, that the blame game has already begun. Not unlike other sectors, it's a very difficult time for the insurance industry, which is currently facing a large number of claims directly relating to COVID-19. The focus so far in the press has mainly been in relation to the declinature of business interruption claims, but this is likely to develop further as time goes on. Insurers can expect to receive claims and notifications in the future indirectly arising from COVID-19, which we're terming silent or non-affirmative cover. I recently recorded a podcast with my colleague Ed Lewis on this very subject, looking at potentially unintended cover for coronavirus-related issues in design and construct policies. In terms of the affirmative coverage for COVID-19, however, legal action is being planned by campaign groups against insurers to challenge declinatures in relation to business interruption cover. As Anne-Marie will come on to, there appears to be a view that insurers are contriving their wordings to avoid sharing the financial burden. The position of policyholders in desperate times is understandable, where a successful insurance claim may make the difference between survival and failure of their businesses. Having paid what they consider to be significant premiums for their insurance, they now say that this should cover the effects of any closures. At the same time, however, insurers are concerned at their claims exposure, where they would say their policies were not intended to cover government-mandated closures due to this global pandemic. They have not collected the premiums to enable claim payouts in this area. Insurers have obligations to treat their customers fairly, but that doesn't require them to pay every claim presented to them, irrespective of the merits. It requires them to be consistent in their approach and to ensure, amongst other things, that consumers do not face unreasonable post-sale barriers imposed by the firms to submit a claim or make a complaint. The FCA has issued a warning to insurers that they must act promptly and fairly in assessing, and where liability is accepted, paying claims for business interruption. However, those insurers who have been in the news recently would no doubt say that they've complied with this directive and have done the right thing by their customers by providing an early decision on coverage. This means that each policyholder has clarity about their position, even if this is not the answer that they were wanting. This, insurers would say, will allow their customers to seek alternative financial assistance where this is available. Clearly, until these cases reach the courts, we'll not know who is right and who is wrong, and different policy wordings will produce different results, as you would expect. The FCA have, of course, recently indicated that they will be seeking legal clarity on business interruption insurance to resolve doubt for businesses who are facing uncertainty on their claims, and this is obviously welcome. However, that is only intended to resolve a selected number of key issues causing uncertainty. The FCA have, of course, also said that they believe in the majority of cases, business interruption insurance was not purchased to cover and is unlikely to cover the current emergency. And as such, I anticipate that litigation will not be avoided entirely.
Yes, it's also true to say, isn't it, that the vast majority of businesses don't have business interruption cover. And of those that do, many policies have exclusions around the occurrence of infectious disease. In any event, typically business interruption policies for smaller businesses only provide up to around £100,000 of cover. And in some cases, this may not be enough to ensure the survival of a business. Insurers are often seen in the wider community as faceless companies with unlimited sources of funds who will try every trick in the book to avoid paying out claims. But what many people will not appreciate is that the Association of British Insurers has recently estimated to the Treasury Select Committee that its members will pay out over £1.2 billion in claims to support businesses and individuals as a result of COVID-19. The sorts of policies they'll be paying out on are business interruption policies, travel insurance, council weddings and cancelled school trips. And that £1.2 billion estimate, in fact, excludes claims that will be made through Lloyd's and the London market. Of the £1.2 billion, £900 million relates to business interruption claims, and £275 million relates to the cancellation of travel events and school trips. It should also be remembered that these enormous payments are following hot on the heels of the £363 million paid out to customers by insurers following storms Kira and Dennis earlier this year. So I think that these vast sums which insurers are likely to be paying out to their customers who've been affected in various ways by COVID-19 show that insurers will undoubtedly be paying their fair and legitimate share of the financial consequences resulting from the pandemic.
Thanks, Anne-Marie. I'm conscious that we've focused a lot on insurers in this podcast, but I think it's also worth considering the role of insurance brokers too. Policyholders who don't succeed in their claims may well turn to brokers in their quest for compensation. Brokers no doubt find themselves in a difficult position trying to support policyholders on the one hand, whilst at the same time perhaps concerned as to those future claims on point of sale advice to policyholders. But can brokers really be to blame? Was the current situation really foreseeable by brokers or indeed insurers or anyone, including government? In the first podcast of this series, our colleague Ed Lewis outlined the history of pandemics, and he pointed to the relatively small percentage take-up of specialist covers, including earthquake, terrorism and cyber, even following the occurrence of terrible events that might have prompted much more wide-scale purchasing of such policies. And even if brokers had the foresight to raise with their customers and insurers the availability of specifically tailored policies to cover the current conditions, which, let us not forget, have not been seen in the UK for over 100 years, would the premiums offered have been so significant so as to deter most customers from purchasing this cover? Professional negligence claims against brokers arising out of the COVID-19 fallout would be subject, I think, to significant hurdles in terms of duty, breach, causation and loss. A policyholder would need to prove that there was a policy available in the market that was suitable for their needs, that they could afford this and that they would have actually bought it. It would also need to be proved that a policyholder's loss was caused by its broker's negligence rather than for some other reason. Again, this will be fact specific. Clearly, this is something to watch out for in the coming weeks and months, but in the meantime, there's been a loss of confidence in the industry, and it seems to me that the industry needs to come together at this time to restore that public trust and confidence. This is going to require everyone from the FCA, the Financial Ombudsman, insurers and brokers to collaborate, with the involvement of government, of course, to steer the ship through these choppy waters. To sum up, therefore, I think recent headlines in the press are perhaps unfair on insurers and they don't reflect the full picture. There's also a question as to what the industry will look like post-COVID. Where insurers have made payments to policyholders, premiums are likely to increase. Capacity and appetite for risk may also change significantly over the coming months and years, as may policy wordings. We're all in this together, and I think we should resist the urge to look for someone to blame for circumstances which none of us foresaw and have not seen in our lifetimes. I think it was Bill Gates who said recently that this pandemic is like a world war, except we're all on the same side. I think that's absolutely true. That there needs to be a coming together, a circling of the wagons, if you like, around the insurance industry, so that it emerges stronger from the current situation for the good of everyone, including insurers, brokers and policyholders. Notwithstanding the FCA seeking judicial clarification on selected issues, there's also likely to be much litigation and arbitration in the future on both coverage disputes and claims against brokers where coverage is declined. This risks further damaging public trust and confidence in the industry, and so a collaborative approach, I think, is required to restore this.
Yes, that's got to be right. And as you say, Richard, we should try to remember that the COVID-19 pandemic is really regarded as being a once-in-100-year occurrence, with no pandemic on this scale since the Spanish flu pandemic of 1918. It's very easy to be wise after the event, and arguably that really does apply to the fact that the scale and ferocity of this pandemic were just not foreseen even when the virus emerged from Wuhan at the end of last year. Of course, insurance policies always evolve following the occurrence of particular events, such as the evolution of terrorism insurance and cyber insurance, and certainly underwriters will be giving active consideration to their current policy wordings and exclusions as they contemplate occurrences in the future of new viruses spreading on a global scale. What's clear, I think, is that it should not be for insurers to be subject to moral opprobrium for not paying out in respect of claims against policies which were not written in contemplation of the event giving rise to the claim. It's also been said by the ABI, and this is certainly true, that significant state involvement is likely to be needed for future occurrences of similar pandemics, just as at present, because the sheer cost to the economy is something that only a government will be able to withstand.
Thanks, Anne-Marie. That certainly provides some food for thought and brings our podcast to a close. We hope that you've enjoyed our podcast, and on behalf of Wakeman's, please do stay safe, and we hope to see you soon. Thank you.